One of the top achievements a dividend stock can attain is the status of Dividend King. To become a Dividend King, a company must increase the amount it pays out in dividends to its shareholders every year for 50 consecutive years. Some well-known examples of Dividend King stocks are companies like Johnson & Johnson, Walmart, and one of Warren Buffett's largest holdings, Coca-Cola. It's important to remember that just because a stock is a Dividend King doesn't necessarily make it a great dividend stock, but analyzing Dividend Kings can be a great way to find companies that have management teams that are committed to rewarding their shareholders with growing dividend payments year after year. So in this video, we're going to be analyzing every company that is a Dividend King as of 2024. More specifically, we'll be analyzing the dividend metrics for these companies. To analyze these companies, we'll be using my dividend breakdown spreadsheet, which you can download on tickerdata.com at the link in the description. And if you'd like to receive a spreadsheet that lists out all 2024 Dividend Kings for free, then you can sign up for my newsletter at the link in the description below. So with all that being said, let's dive into the Dividend King analysis. Now, the first Dividend King on our list is the highest yielding Dividend King, and that is Leggett Platt, stock ticker LEG, currently trading at $17.47 per share. Now, over the past year, this company has really struggled, down around 44.76%. And if we go ahead and jump over to the dividend breakdown tab, we'll come up here and plug in stock ticker LEG and hit enter. And you can see, thanks to the ticker data add-on on Google Sheets, all of this data will automatically load in. Now, this company has a very high starting dividend yield, sitting at 10.53%. So they are paying out massive dividends. And again, Dividend King, so over 50 consecutive years of dividend payments. And we can see in 2013, they were paying out $1.18 per share in dividends. And in 2023, it jumped all the way up to $1.82. Now, their most recent dividend hike was a small one. It only bumped up their yearly dividends to $1.84. And we can see the dividend growth over the past 10 years is nothing too crazy at around 4%, and the 5-year at around 3%, and the free cash flow growth has been pretty slow as well. We can see the 10-year at 1.32%, and the 5-year at 6.43%. Now we can see as of right now, they have a negative payout ratio, and the reason behind that is if we jump over to their earnings, we can see in their most recent earnings report, they actually reported negative earnings, not a good sign for the company, and their free cash flow payout ratio is sitting at about 62.44%. So if we look at the free cash flow versus dividends paid, yes, we can see those red bar charts are the dividends being paid out, and they're increasing every year, but the free cash flow has been jumping around. But for the most part, so far, free cash flow has been covering those dividend payments, but the free cash flow payout ratio over time has been increasing, not something we want to see. The second highest yielding Dividend King is Altria Group, stock ticker MO. Now, this is a company currently trading at around $40.95, and over the past year, they're down around 9.89% with a recent drawback in the stock price. But go ahead and jump over to the dividend breakdown tab. We'll come up here and plug in MO and hit enter. And again, all this data will automatically load in. Now we can see the company currently has a starting yield of 9.57%. So again, they are paying out big dividend payments, and they've seen pretty decent dividend growth for a high yielder over the past decade, going from around $1.84 to $3.84. So the 10-year dividend CAGR is sitting at about 7%, and the 5-year at about 3.63%. And free cash flow metrics are relatively similar. 10-year free cash flow CAGR of around 8%, and 5-year a little bit lower at around 2.2%. Now the payout ratio for this company is sitting at around 83.38%, which yes, that is relatively high, but we do have to keep in mind this is actually the target payout ratio for management. Their management team has stated they want their payout ratio at around 80%. They also have a free cash flow payout ratio of around 74.57%. So if we look at the free cash flows versus dividends paid out chart, we can see over the past decade, for the most part, they've done a good job of their free cash flow entirely covering their dividend payments, with the exception of 2016 and barely in 2017. But since 2018, again, free cash flow has easily covered those dividend payments, as you can see with our free cash flow payout ratio over time. The third highest yielding Dividend King is 3M Company, stock ticker MMM. And again, this is another company that has struggled over the past year, down around 14.61%, trading at $91.18 per share. If we jump over to the dividend breakdown sheet, plug in 3M and hit enter, we can see some metrics that have me concerned as a dividend investor. Now, yes, nice starting dividend yield sitting at 6.63%, but again, a negative payout ratio due to reporting negative earnings in their latest earnings report. Now, over the past decade, decent job of growing dividends, going from around $2.54 to $6, and their most recent dividend hike put them at $6.04. Now, here's a big problem with 3M. Their 5-year dividend CAGR sitting a little bit below 1%. Now, we have to keep in mind, anytime a company is increasing their dividend payments at a rate below the rate of inflation, then that company is technically paying out less in dividends every single year. So that is a big concern for 3M. Now, why has their dividend payment slowed? The 10-year was at 5.85 and the 5-year at 0.95. Well, we can see the free cash flow is really slowing for this company. The 10-year doesn't look good at 2%, but the 5-year looks even worse at below 1%. So when we look at these blue bars here, we can really see very little growth in their free cash flow, and while the dividend payments are growing as well. So the end result of that is the free cash flow payout ratio is increasing over this time as well. Not a good sign for the company because it leaves less capital left over to do things like reinvest back into the business. The fourth dividend king we're going to look at is Universal Corporation, stock ticker UVV. This company is currently trading at $49.60 per share. Now, they were performing pretty well over a 1-year time period, but we can see in late 2023, their share price really started to decline. And again, they are down around 8.6% over the past year. But go ahead and jump over to the dividend breakdown tab. We'll plug in UVV and hit enter. And we can see the company has a nice starting dividend yield sitting at about 6.47%. And we can see in 2013, their dividend payments were around $2 and 2023 around $3.18. And that puts their 10-year dividend CAGR at 4.6% and the 5-year quite a bit lower at about 1.16%. So again, same case as 3M. Dividend payments have been slowing and it's below the rate of inflation, not a good sign for the company. Now, the payout ratio for them is sitting at 62.39%, but free cash flow payout ratio is showing a negative number, negative 118. Now, why is this? And we can see in 2023, this company generated negative free cash flow of around $65 million, and the same was true in 2022, negative free cash flow of around $8 million. Obviously, not a good sign for the company at all. We want to see that free cash flow covering those dividend payments, so not really a good sign for the company. The fifth dividend stock we're going to look at is Canadian Utilities Limited, stock ticker CDUAF, and we can see this is another company that has struggled over the past year, down around 24.74%. We jump over to the dividend breakdown tab. You can see I've already plugged in the stock ticker. This company has a starting dividend yield sitting at about 6.12%. Now, I removed the yearly dividend payouts because I want to look at Seeking Alpha for this one. We jump over and look at dividend history for this company and zoom out over the past 10 years. You can see the dividend payments aren't consistent on a quarterly basis, but year over year, they are increasing. So that is an important distinction to be aware of. Now, one of the things you'll notice is, again, free cash flow payout ratio is negative because they reported negative free cash flow in 2023, not a good sign for the company. But if we look at the year before that, 2022, it looks like they did cover their dividend with their free cash flow. 2021, same thing, they did not cover their dividend with their free cash flow. So not really something I like to see. When you throw in the fact that over the past 10 and 5 years, free cash flow has not really been growing at a healthy rate. Not a good sign for the company personally, and we can see payout ratio as a result of earnings sitting at about 75.67%, which is also pretty high. Dividend king number 6 is stock ticker NWN, Northwest Natural Holding Company. If we jump over to Seeking Alpha, we can see this company has struggled over the past year, down around 24.35%, and it's currently trading at $35.95 per share. We'll go ahead and jump over to the dividend breakdown tab, plug in NWN and hit enter, and we can see all the data will load in. Now, the starting dividend yield is pretty high still for this company, sitting at about 5.42%, but the dividend growth has been very, very slow for quite some time now. We can see the 10-year dividend CAGR below 1% and the 5-year dividend CAGR below 1% as well. So very slow dividend growth. We can see in 2013, they're paying out around $1.83. 2023, it was $1.94, and their most recent dividend hike was just a 1-cent dividend hike, pushing them to $1.95. Now, the company is not really growing free cash flow. As we can see, the free cash flow has actually been negative for the past few years, but the dividend is covered by earnings with a payout ratio of around 71.74%. Now, regardless, this is definitely not a company I would consider adding to my personal portfolio. Dividend king number 7 is Black Hills Corporation, stock ticker BKH, and they operate in the utilities sector. We can see this company is currently trading at $51.83 per share, and over the past year has not done too well, down a little over 20%. If we jump over to my dividend breakdown sheet, we can see the company has a starting yield just slightly above 5%, and we can see in 2013 they're paying out $1.52, and that has bumped all the way up to $2.50 in 2023, and after their most recent dividend hike, it's now sitting at $2.60 per share. Now, the payout ratio for this company currently sitting at about 64.11%, so a little bit higher, but that's pretty typical for dividend kings. And we can see the free cash flow payout ratio as of 2023, 43.24%, but we can see they did have a stretch of about 4 years where they saw negative free cash flow. Obviously not something we want to see, but again, overall, looks like the payout ratio as a result of earnings appears to be in a healthy range. The 8th dividend king is Fortis Incorporated, stock ticker FTS. This is the 4th utility company we have looked at in a row. Now, this company is currently trading at $37.60 per share, and over the past year, like most utility companies, as we've already seen, down around 15.2%. If we jump over to the dividend breakdown sheet, we can see a starting yield of around 4.65%. Now, also like a lot of utilities company, we can see a lot of years with negative free cash flow. That's because these companies heavily invest into capital expenditures. But payout ratio as a result of earnings sitting at about 48.82%. And if we jump over to Seeking Alpha to look at the dividend history for this company, again, one of the things you'll notice on a quarterly basis, the payments fluctuate a little bit, but year over year, those dividend payments are growing. The 9th dividend king we're going to look at is our first company that operates in the real estate sector. They are a real estate investment trust, and that is Federal Realty Investment Trust, stock ticker FRT. And over the past year, this company has traded pretty flat, only down around 1.3%, and they're currently trading at $97.08 per share. If we jump over to the dividend breakdown tab, we can see they have a starting yield sitting around 4.5%, and it looks like they've done a decent job of growing those dividends over the past decade, going from $3.02 to $4.34, but the most recent dividend hike was a small one, bumping it up to around $4.36. Now, at first glance, one of the things you'll notice, payout ratios look quite a bit higher than we typically like to see. Now, we have to keep in mind this is a real estate investment trust that we're talking about. So anytime you're looking at a REIT, these payout ratios really aren't the best measures of the safety of the dividend. What we need to be looking at is the AFFO payout ratio. That stands for Adjusted Funds from Operations. And we can see, looking at it forward-looking for FRT, it looks like their AFFO payout ratio is sitting at around 83%, which is a lot more common for real estate investment trust. So really, don't pay attention to these payout ratios when looking at a real estate investment trust. Now, with all that being said, we can see the dividend growth for this company has been quite a bit slower than we'd like to see over a 10 and 5-year time period. But again, payout ratio appears to be in a decent spot, and dividend yield looks pretty solid as well. The 10th dividend king we're going to look at is a company that operates in the consumer defensive sector, and that is Kimberly-Clark Corporation, stock ticker KMB. This company is currently trading at about $125.98 per share, and over the past year is down around 9%. If we jump over to the dividend breakdown tab, we can see they have a starting yield sitting at 3.87%, and the dividends have grown a decent bit over the past decade, going from $3.24 to $4.72. Now, the dividend growth isn't anything too crazy. We can see the 10-year at about 3.8 and the 5-year at about 3.44%, but it is nice to see the consistent dividend growth. The free cash flow payout ratio sitting at about 57.2%, with a payout ratio as a result of earnings at about 90%. So when we look at the free cash flow versus dividends paid out chart, we can see free cash flow is easily covering those dividend payments as of right now, something we do like to see as a dividend investor. The 11th dividend king is National Fuel Gas Company, stock ticker NFG. Obviously, this company operates in the energy sector, and they're currently trading at $52 per share, and over the past year, down around 7%. Now, this company has a decent starting yield, sitting at about 3.8%, and as a result of their latest quarter's earnings, the payout ratio is nice and low, sitting at about 37%. That is something we like to see, and the yearly dividend growth has been decent for an energy company, going from $1.49 to $1.96. Now, the growth is still not very high, but for an energy company, it is decent, especially for a dividend king at about 2%. Obviously, ideally for my personal portfolio, I'd like to see dividend growth rates higher than this. The 12th dividend king is Consolidated Edison, a company that operates in the utilities sector, stock ticker ED. We can see this company is down about 7% over the past year, and if we jump over to the dividend breakdown tab, the starting yield for this company is still pretty decent, sitting at about 3.68%, in the payout ratio in a healthy range, sitting at about 43.51%. Now again, this is a company in the utilities sector, so we want to pay a little bit more attention to the actual payout ratio than the free cash flow payout ratio. We can see dividends have grown from about $2.46 to around $3.24, and after the most recent dividend hike, sitting at about $3.32. So the 10 and 5-year dividend growth, nothing too crazy at about 2 to 3%, but that is decent for a utilities company. The next dividend king we're going to look at is one of the more popular ones out there, and that is AbbVie, stock ticker ABBV. And one of the things you'll notice immediately is over a 5-year time period, this company has increased their dividend payments more than any of the other companies we've looked at, increasing it by 64.62% over the past 5 years. we can see the company is currently trading at $164.25. It is up around 1% over the past year. If we jump over to the dividend breakdown tab, we can see the starting yield sitting at about 3.77%, and the dividends have grown considerably over the past 10 years, going from $1.60 to $5.92, and after the most recent dividend hike, $6.20. So they have rapidly increased their dividend payments over a 10-year time period, with a 10-year dividend CAGR sitting at 14.08%. That is very solid dividend growth, and the 5-year sitting at about 7.7%. Now, dividends are paid out of free cash flow for this company, so we can see free cash flow payout ratio at about 47.77%. That is a healthy ratio. We can see free cash flow is easily covering those dividend payments over the past decade, and if we look at the free cash flow payout ratio over time, it's stayed in a healthy range, pretty much below 50% over the past 5, 6, or 7 years. Our next dividend king is only our second king operating in the industrial sector, and that is Stanley Black Decker, stock ticker SWK. Now, over the past year, the company's actually done pretty well. It's up around 12.15%, and they're currently trading at about $89.33 per share. Now, we can see the starting dividend yield for this company sitting at about 3.63%, and the dividends have grown at a decent rate over the past decade for Dividend King, going from $1.98 to $3.22. That gives them a 10-year dividend CAGR of 4.73%. Now, we can see for the most part over the past decade, free cash flow has been covering these dividend payments that are being paid out, with the exception of 2022. But in 2023, the free cash flow payout ratio was sitting at about 56.6%, which appears to be in a healthy range for this company. Our next dividend king is Hormel Foods Corporation, stock ticker HRL. This company is currently trading at about $34.04 per share, and over the past year, down around 15.37%. If we jump over to the dividend breakdown sheet, the starting yield sitting at about 3.32%. Now, if we look at the yearly dividend payouts, you might be thinking, well, it doesn't look like they've been increasing dividends every single year. It looks like they had a dividend cut. Well, this actually isn't the case. What actually happened with this company is they had a stock split. And if we jump over to the dividend history and look at it on Seeking Alpha, we can see right here, 2016, they had a 2-for-1 stock split, which explains why we see this little blimp in the yearly dividend payout chart here. Really, dividend payments have been increasing every single year. Free cash flow payout ratio currently sitting at about 76.25%, and we can see free cash flow has been covering those dividend payments every year for the past decade. 10-year dividend CAGR of about 3.51%, but they have been increasing dividends at a little bit of a faster rate over the past 5 years with a 6.11% dividend CAGR. Our 16th dividend king is going to be stock ticker ADM, which is Archer Daniels Midland Company. We can see the past year has been a rough one for this company, down around 26.5%. And if we jump over to the dividend breakdown tab, starting yield sitting at about 3.31%. Now, the payout ratio in a healthy range sitting at about 28.05%, and the dividend increases have been actually pretty decent for this company, with a 10-year at about 7.62% and the 5-year at 7.39%. Now, our next dividend king is one of the most popular dividend stocks of all time, and that is the Coca-Cola Company, stock ticker KO, one of Warren Buffett's largest holdings. We can see over the past year, the company's down around 7.8%, but obviously if we zoom out and look at the big picture, the company has done quite well over a long period of time. If we look at the dividend breakdown for this company, the starting yield currently sitting at 3.32%, and the dividend payouts over the past decade decent at around 4.75%, going from $1.12 to $1.84 per share. And over the past 5 years, it's slowed down just a little bit more, closer to around 4% with the dividend growth. Now, we can see their dividend payouts are completely covered by their free cash flow. Free cash flow payout ratio of around 81.58%, but that is still a pretty high free cash flow payout ratio, even for a company that is a dividend king. But again, we can see free cash flow is covering those dividend payments. Now, high free cash flow payout ratio has been pretty standard for this company over the past 5 years. We can see for the most part, it's been in the range of around 80%, so that is pretty standard. Our next dividend king is another really popular one, and that is PepsiCo, one of Coca-Cola's competitors, stock ticker PEP. This company is currently trading at $169.48 per share, and over the past year, down around 8.12%. We jump over to the dividend breakdown tab. We can see the starting dividend yield is right below 3% at 2.99%. But this company's seen a little bit more dividend growth than Coca-Cola over the past decade, going from $2.24 to $4.95, and with their most recent dividend hike, $5.06 per share. So that's a 10-year dividend CAGR of about 7.17%. Now, just like Coca-Cola, they do have a pretty high free cash flow payout ratio at about 84.33%. Again, in an ideal world, I would like to see this be a little bit lower because most of their free cash flow is being used to pay out dividends, and we can see over the past decade, their free cash flow payout ratio has been increasing over time That's really not something I like to see. Now, the 5-year free cash flow CAGR has been decent for a Dividend King at about 5.26%. For them to be able to continue to raise dividends at a high rate, they're going to be able to need to maintain solid free cash flow growth just like this. Our next Dividend King is again going to be a very popular one, and that is Johnson & Johnson, stock ticker J&J. We can see this company is trading at $144.77 per share. Now, over the past year, the company was doing well, but just in the past month alone, they've actually done pretty poorly, down around 8%, and over the past year, down around 12.8%. Now, the good news is that bumps up the starting yield for the company, and it's now pushed it to around 3.29%. And the company's done decent increasing those dividends over the past decade, going from $2.59 to $4.70, which is a 10-year dividend CAGR of 5.6%, and the 5-year pretty close to around 5% as well. And one of the things we'll notice is the free cash flow is doing a good job of completely covering those dividends over the past decade, with the free cash flow payout ratio sitting at about 64.5%, and the free cash flow payout ratio over time, for the most part, staying in around the same range, but we have seen it bump up just a little bit over the past couple of years. Hopefully it doesn't go any higher than that. The next Dividend King we're looking at is SJW Group, stock ticker SJW, and they operate in the utilities sector. Jump over to Seeking Alpha, we can see it's been a rough year for them, down around 33%, and if we look at the dividend breakdown tab, starting yield sitting at about 2.93%. Payout ratio for this company sitting at about 56.37%, and again, decent dividend growth over the past decade, especially for a utilities company with a 10-year dividend CAGR at about 7.46%. Now, like most utilities companies, they do have negative free cash flow, pretty standard in their industry, but again, overall, decent payout ratio, solid starting yield, and pretty decent 10-year dividend CAGR from this company. Our next Dividend King is the first one we have seen in the financial services sector, and that is Cincinnati Financial Group, stock ticker CINF. Now, over the past year, the company's trading at $115.30 and is up around 7.24%. So they've done fairly well, and the starting dividend yield for this company is sitting at about 2.81%. Payout ratio only about 24.63%, and free cash flow payout ratio only around 22.32%. Now, you can see there's a couple of years where it looks like the dividend payment was a little bit higher than the previous year, and the reason because of this is they paid out a few special dividends during 2017 and 2015. This company is still a Dividend King, and we can see free cash flow has easily been covering those dividend payments over the past decade. That's a beautiful free cash flow versus dividends paid out chart, and it's exactly what I like to see. Pretty solid dividend growth as well, 10-year at 6.3 and the 5-year at 7.66, and the free cash flow growth has been really nice as well. There's a lot to like about the metrics for this company. Our next Dividend King is Genuine Parts Company, stock ticker GPC, and this company is currently trading at $144.07 per share, and over the past year, down around 13.37%. The starting yield for this company is sitting at about 2.78%, and the payout ratios look to be pretty healthy, and the dividend growth has been decent, going from about $2.15 to $3.80 over the past decade, with a 10-year dividend CAGR of 5.7% and the 5-year dividend CAGR pretty close to that as well. And again, we can see free cash flow easily covering the dividend payments for this company, something we like to see. Our next Dividend King is another utilities company. That is Middlesex Water Company, stock ticker MSEX, and we can see over the past year down around 41.83%. So they have really struggled, just like a lot of utilities companies, and they're currently trading at $45.89 per share. We can see the starting yield for this company sitting at 2.83% and their payout ratio in an okay range at about 71.57%. Again, this is a utilities company, so we don't want to pay quite as much attention to free cash flow because it is usually going to be negative, which is pretty standard for their industry. Now, the dividend growth has actually been decent at around 5.5 to 6% over the past 5 and 10 years. Our next Dividend King is Sysco Corporation, stock ticker SYY, and this company has traded pretty flat over the past year, up around 0.21%, trading at $70.44 per share. If we look at the dividend metrics for this company, we can see starting yield sitting at about 2.65% with pretty healthy payout ratios and a 10-year dividend CAGR of about 5.51%. We can also see free cash flow is easily covering those dividend payments over the past decade, a pretty good sign for the company. The next dividend stock we're going to look at is a fairly popular one, and that is Target Corporation, stock ticker TGT. They've traded pretty flat over the past year, up around 0.38%, but look at the past 5 years, up over 100%, so that is pretty solid. If we look at the dividend metrics for this company, they have a starting yield sitting at about 2.68%, and the payout ratios seem to be in a decent range, and they saw some really nice dividend hikes going from 2021 to 2022. That was a massive dividend hike, and 2022 to 23 was a pretty big dividend hike as well. So we can see that 5-year dividend CAGR really nice at around 11%. That's a really good sign for the company, in the 10-year at 8.76%. And the free cash flow is covering those dividend payments with the exception of 2022. The company really struggled that year and generated negative free cash flow. But other than that, it looks like there's a lot to like about the metrics from these companies. Our next company is another utility company, and that is California Water Service Group, stock ticker CWT. Over the past year, like most utilities, they have struggled, down around 25.56%. And if we jump over to the dividend breakdown sheet, starting yield sitting at about 2.54%. Now the payout ratio not in a healthy range, sitting at about 113%. That's not something we like to see. And of course, like most utilities companies, negative free cash flow. Now the dividend growth has been decent over the past 5 years, with a compounded annual growth rate sitting at about 7.23%, and the 10-year is pretty decent at about 5.6%. Our 27th dividend king is another utility company, and that is American States Water Company, stock ticker AWR, and again, they have struggled over the past year, down around 26.5%, currently trading at $67.15 per share. Starting yield for this company is sitting at about 2.56%, and the payout ratio is actually in a healthy range for them, sitting at about 48.9%. And they've seen pretty solid dividend growth over the past 5 years at about 8.2%. That's a pretty high dividend growth rate for a utilities company. The 10-year is pretty solid as well at 7.5%. Our next dividend king stock is Procter Gamble, stock ticker PG, and this company over the past year has done decent, up around 4%, currently trading at $156.96 per share. We can see the starting yield for this company sitting at 2.57%, and the payout ratios both in a decent range for a dividend king. Now, the 5-year dividend CAGR for this company has actually been pretty solid at about 6.4%, in the 10-year close to around 4.75%. Now, ideally for them to maintain that decent dividend growth rate, we need the free cash flow to be growing just a little bit faster, but as for now, with that 65% free cash flow payout ratio, we can see the free cash flow is easily covering those dividend payments, and the free cash flow payout ratio for the most part has stayed close to around 65%, with a couple years where it's been just a little bit higher, but again, overall it looks like those dividend payments are growing at a pretty healthy and steady rate. Our next dividend king is Colgate-Palmolive Company, stock ticker CL. We can see this company is trading at $86.75 per share, and over the past year, up around 14.35%. Starting yield for this company is sitting at about 2.31%, and again, payout ratios seem to be in a healthy range. Now, the dividend growth rates for the 10 and the 5-year both sitting a little bit above 3%, and we can see the free cash flow versus dividends paid chart here. Looks like for the most part, free cash flow doing a pretty good job of covering those dividend payments over the past decade. Our 30th dividend king stock is another company in the industrial sector, and that is Illinois Toolworks Incorporated, stock ticker ITW. And this company is currently trading a little under $250 per share, and over the past year, up around 7.91%. Now, the starting yield for this company sitting right at 2.24%, and we can see they have been rapidly increasing their dividends over the past decade, going from $1.60 to $5.42 in 2023. So that's a 10-year dividend CAGR of right at 12%. So that is rapid dividend growth. We do love to see that. The payout ratios are in a very healthy range as well. And again, we can see free cash flow easily covering those dividend payments over the past decade. Now, something we do need to point out is the free cash flow payout ratio over time has been increased. That's not necessarily a good sign for the company. That means the dividend payments are growing faster than the free cash flow is growing, which we can easily see is the case here when we compare the 10-year dividend CAGR to the 10-year free cash flow CAGR. So overall, to maintain that high dividend growth rate, they will need to increase the rate at which they increase their free cash flow. Our next dividend king is Commerce Bancshares, stock ticker CBSH, and this is a company currently trading at $53.07 per share and is down 3.24% over the past year. Now, this company has a lower starting dividend yield, pretty close to around 2% at 2.04%, but those payout ratios look very healthy with a payout ratio of 28.24 and FCF payout ratio of 33.6. Now, the dividends have not been growing fast at all, though. The dividend growth has been very slow over the past decade, so that's definitely something you need to take note of. The next dividend king we're going to look at is ABM Industries Incorporated, stock ticker ABM. And this company has traded pretty flat over the past year, down only 0.18%, and is currently trading at $43.64 per share. Now, if we jump over to the dividend breakdown sheet, we can see it has a starting yield sitting at 2.06% with a very nice low payout ratio sitting at 22.88%. Now, when we look at the yearly dividend payouts, it looks like it kind of jumps all over the place, but there actually is a reason for this. If we jump over to the dividend history and look at the past decade and look at the dividend payouts on a quarterly basis, we can see those quarterly dividend payouts actually are growing. The reason it looks like that on a yearly basis is occasionally the company will pay out 3 dividend payments in 2020, and for example in 2019 it was 5 dividend payments. So on a quarterly basis, yes, those dividend payments are still growing, so that's an important note to make. Our next dividend king is one you may have heard of before, and it operates in the healthcare sector, and that is Abbott Laboratories, stock ticker ABT. And this company over the past year, again, pretty flat, up around 1.32%, and is trading at $105.90 per share. And if we look at the dividend metrics, starting yield a little above 2% at 2.08%, but the dividend growth has been really good from this company. We can see a 10-year dividend CAGR at 9.6, and the 5-year even higher at 11.44%. So really solid dividend growth from this company. That's exactly what we like to see, and the payout ratios are in a decent range for the most part. We can see in 2013, paying out around 56 cents per share, and 2023, $2.04 per share. And if we look at the free cash flow versus the dividends paid out, free cash flow has easily been covering those dividend payments. The next dividend king is a company that operates in the industrial sector, and that is Emerson Electric Company, stock ticker EMR. And this company is currently trading at $109.81 per share and has done pretty well over the past year, up around 26.83%. Now, something you'll notice about this company, starting dividend yield 1.91%, but if you come over here and look at the free cash flow versus dividends paid out, we can see in 2023, free cash flow plummeted for this company. Now, historically speaking, their free cash flow has been covering those dividend payments, so obviously this isn't sustainable, but if it's a one-time thing, it shouldn't be too big of a concern for the company. But I also need to point out the yearly dividend payout growth has been very, very slow for this company. As we can see, we have a 5-year dividend CAGR of 1.29% and a 10-year of just 1.78%. But payout ratio as a result of earnings is very low, only at 9%. Dividend king number 35 is the Gorman-Rupp Company, stock ticker GRC, and over the past year they have done very well, up around 51.12%, currently trading at $36.01 per share. Now, why are they up so much? Well, one reason may be they generated a massive amount of free cash flow for their historical data in 2023, $77 million, and we can see that's quite a bit higher than they've ever had over the past decade. So starting yield of around 2%, and payout ratios appear to be in a very healthy range, especially with the most recent year of massive free cash flow. Decent dividend growth over the 5 and 10 years, and it looks like they paid out a special dividend in 2018 that was quite a bit larger than the historical dividend normal for them. Our next dividend king is Farmers and Merchants Bancorp, stock ticker FMCB, and they're currently trading at $965 per share and have been pretty flat over the past year, down around 0.78%. And if we jump over to the dividend breakdown tab, we can see a starting dividend yield of 1.82%. Now, what I really want to point out for this company is we can see free cash flow for this company over the past decade is easily covering those dividend payments. It's leading to a very low free cash flow payout ratio, and in fact, the free cash flow payout ratio has been declining over the past decade, which is a good sign for the company. That's because free cash flow has been exploding for this company over the past decade, and that is a good sign. The next dividend king on our list is PPG Industries, stock ticker PPG, and this company is trading at $134.96 per share, and over the past year, down around 4.24%. Now, the starting yield for this company sitting right at 1.9%, and the payout ratios look to be in a very healthy range. Now, again, when we look at this yearly dividend payout chart, it looks like they're not increasing dividends, but again, if you do a little more investigating, you'll see this is the result of a stock split that the company had, I believe, in 2015. You can see right here, it looks like 2015 they had a 2-for-1 stock split. So in reality, dividend payments have been growing every single year, meaning the dividend growth is obviously higher than the negative 0.19%. When we look at the free cash flow versus dividends paid out chart, we can see free cash flow is easily covering those dividend payments with the exception of 2022. So for the most part, pretty good job of generating free cash flow to pay out dividends. The next dividend king we're looking at is actually one of my favorites right now, and that is Lowe's Company, stock ticker LOW. It's a company I own in my personal portfolio. They're currently trading at $228 per share, and over the past year, up around 11.64%. Now, this company has seen massive dividend growth over the past decade. We can see 10-year dividend CAGR sitting at 18.29% in the 5-year at 16.39%. So the dividend growth has been exploding for this company, going from 68 cents to 2013 to $4.30 in 2023. So yes, a low starting yield, but those dividend payments are growing at a very fast rate over the past decade, and the payout ratios have stayed in a healthy range during that time period as well. Now, we can see free cash flow easily covering those dividend payments, obviously something we like to see. Our next dividend king is Lancaster Colony Corporation, stock ticker LANC, and this company is currently trading at $185.40 per share, and over the past year, down about 5.74%. If we look at the dividend metrics for the company, starting yield sitting at about 1.94%, and if we look at the dividend history, we can see solid dividend growth, and it looks like they paid out a special dividend in 2015 that was a pretty large amount. So 10-year dividend CAGR sitting at about 7.3%. So pretty solid dividend growth for a dividend king. Free cash flow payout ratio at about 68% as of 2023. So that's a decent free cash flow payout ratio, but payout ratio as a result of earnings, 83%, a little bit higher than I typically like to see it. Now, I'd like to see free cash flow grow at a higher rate as well, so they can sustain more dividend growth in the future. The next dividend stock is Stepan Company, stock ticker SCL. And we can see this company's trading at $81.61 per share, and over the past year, it's been pretty rough, down around 17.7%. And if we look at the dividend metrics for this company, personally, I don't really like what I see. They do have decent dividend growth over a 10-year time period at around 8%, but with a low starting yield sitting at 1.84% and the payout ratio already quite a bit higher than I typically like to see it. Keep in mind, they also have negative free cash flow over the past 3 years. Really, this isn't a stock I would consider adding to my portfolio. Our 41st dividend king is Becton, Dickinson and Company, stock ticker BDX, and this company is currently trading at $232.21 per share, and over the past year, down around 9.86%. Now, the dividend growth from this company has been decent at around 5.45% over a 10-year time period, but it's slowed down a little bit over the past 5 years, starting yield of around 1.64%. Now, the payout ratio sitting at about 75%, free cash flow payout ratio a little bit healthier at about 52.67%, and we can see over the past decade, free cash flow has grown at a decent rate, but it's dropped in 2022 and 2023 by quite a bit, but still, free cash flow is covering those dividend payments. The next dividend king we're looking at is RPM International, stock ticker RPM, and this company is currently trading at $107.36 per share and has done pretty well over the past year, up 30%. That's a pretty good year. If we look at the dividend metrics for this company, their starting yield sitting at 1.71%, and the dividend growth has been okay. The 10-year sitting at 6.5% and the 5-year at 5.47%, with 2013 dividend payment sitting at 69 cents and the 2023 dividend payment $1.72. Now we can see payout ratio for the most part looks pretty good, sitting at 44.69%, and free cash flow payout ratio at about 66.29%. Now they did have 1 year in 2022 where they generated negative free cash flow, as we can see here, but for the most part, free cash flow is covering those dividend payments, but free cash flow is definitely not growing at a high rate, so we do need it to be a little bit higher to sustain higher dividend growth. Our next dividend king is a popular one I'm sure you've heard of, and that is Walmart, stock ticker WMT, and over the past year, company's up around 19% and is currently trading at $59.65 per share. If we jump over to the dividend breakdown tab, we can see they have a starting dividend yield sitting at 1.39%, payout ratio at about 52%, and free cash flow payout ratio around 51%. Now, the dividend growth rates show negative. Now, why is that? Well, as of 2024, Walmart just recently had a stock split. So in reality, these dividend growth rates aren't quite correct. In reality, it's closer to around 2%, which still isn't very high, but they still have been increasing their dividend payments year over year for over 50 consecutive years. We can also see free cash flow doing a good job of covering all those dividend payments with a free cash flow payout ratio in 2023, again, around 51%. The next dividend king is Dover Corporation, stock ticker DOV. We can see Dover is currently trading at $169.50 per share, and over the past year is up around 14.39%. And if we look at the dividend metrics, we can see they have a low starting dividend yield sitting at about 1.2%, but they also have low payout ratios as well, meaning they're probably using a lot of capital to reinvest back into the business. So dividend payments went from $1.45 to $2.03 in 2023, and their most recent dividend hike put them at $2.04, so those dividend payments are really starting to slow when it comes to their growth. Now, free cash flow is easily covering those dividend payments, and in fact, over the last 5 years, they've seen pretty good free cash flow growth, up around 13% with a 5-year free cash flow CAGR. Free cash flow payout ratio over time, for the most part, has stayed below 50%, over the past decade. Our next dividend king is Tootsie Roll Industries, stock ticker TR, and this company is currently trading at $29.82 per share, and it's not been a good year. They're down around 30.7%, and if we look at the dividend metrics, we can see the yield sitting at 1.21%. Now, the payout ratios for this company are quite low, but the dividend growth has been very, very slow for them as well. Free cash flow is easily covering those dividend payments, but really there's almost no dividend growth with this company. Our 46th dividend king is Nucor Corporation, stock ticker NUE, and they operate in the basic materials sector. currently trading at $192.78 per share. And over the past year, they're up around 30.55%. So they've done very well during this time period. Starting yield sitting at about 1.12%. Now look at this, payout ratio sitting at just 11.37%. So this appears to be a very safe dividend. And when you look at how the free cash flow has been easily covering the dividends in 2020, 21, and 2022, I think you can feel pretty safe about this company having very safe dividends with a decent dividend growth rate with the 5-year at 6.15%. The next dividend king is Parker-Hannifin Corporation, stock ticker PH, and they operate in the industrial sector, currently trading at $540 per share. And over the past year, they have exploded up around 66%. And from a dividend perspective, there is a lot I like about this company. Now, the starting dividend yield is low, sitting at 1.10%. But just look how fast these dividend payments have grown over the past decade. That's a 10-year dividend CAGR of 11% and a 5-year, 11.73%. And these payout ratios are nice and low, 33.8%, and the free cash flow payout ratio sitting at 27%. So you can see free cash flow is easily covering those dividend payments over the past decade, and free cash flow is growing at a high rate as well, with the 10-year sitting at 10.8% and the 5-year at 13.95%. Again, from a dividend perspective, there is a lot to like about this company. Our next dividend king is H.B. Fuller Company, stock ticker FUL, and they operate in the basic materials sector. And this company is currently trading at $76 per share, and over the past year, they've done pretty well, up around 12.76%. Now, the starting yield for this company is sitting at 1.17%, and the payout ratios are nice and low. We can see an earnings payout ratio of around 30%, and free cash flow payout ratio of around 16.74%. And dividend growth has been pretty good over the past 10 years. 10 and 5-year dividend CAGR both around 7%, so that is pretty solid. We can also see since 2016, free cash flow has easily been covering those dividend payments. That's a good sign for the company. Our next dividend king is Nordson Corporation, stock ticker NDSN. And this company is currently trading at $260.80 per share and has done pretty well over the past year, up around 19.26%. Now, from a dividend perspective, again, personally, there's a lot I like about this company. The yield is low. It's only sitting at about 1.04%, but the payout ratios are in a very healthy range, and the dividend growth has been very good. We can see a 10-year dividend CAGR of 13% and a 5-year dividend CAGR of 13.25%. So 2013, they're paying out 66 cents per share. 2023, $2.66. So this dividend growth has really been exploding over the past decade. And here's what I really like as well. That dividend growth is backed by free cash flow growth. Free cash flow has been easily covering those dividend payments over the past decade, which we can easily see with our free cash flow payout ratio over time chart. Our 50th dividend king is MSA Safety Incorporated, stock ticker MSA. This company is currently trading at $185.91 and has exploded over the past year, up 41.27%. When we look at the dividend metrics, they have a yield at 1.01%. Now, the payout ratios are quite a bit higher than I'd like to see, and we can see free cash flow has been declining over the past few years. In fact, 2023, free cash flow did not cover those dividend payments. Not a good sign for the company. We can see the 10-year dividend CAGR, nothing too crazy at about 4.33%, and a 5-year, a little bit lower even at 2.77%. Our next dividend king is Tennant Company, stock ticker TNC. And this company has done really well over the past year, up 71.45%, and is currently trading at $115.66 per share. When we look at the dividend metrics, we can see this company has a below 1% starting dividend yield at 0.97%, but the payout ratio is very low at 18.36%, and free cash flow payout ratio just at 12.23%. And it's easy to see why the share price has jumped up so much over the past year. Look, they had a record year free cash flow in 2023, quite a bit higher than it had been over the past decade. Now, the 5-year dividend CAGR is sitting at 4.94% and the 10-year at 3.68%. So dividend growth has been decent, but nothing too crazy. The second to last dividend king we're going to look at is S&P Global, stock ticker SPGI. And this company is trading at $412 per share over the past year. Very good, up 18%. And look at this, over the past 10 years, way outperforming the market, up 448%. Now, the yield is low, sitting at 0.88%, but the payout ratios are low as well. And just look at the yearly dividend growth over the past decade. This chart really is a thing of beauty, going from $1.12 to $3.60. That's a 10-year dividend CAGR of 11.74% and a 5-year of 9.81%. And again, the beautiful thing about this is this dividend growth is completely backed by their free cash flow growth. Free cash flow has been exploding for the company with a 10-year FCF CAGR of 17.7% and 5 at 12.8%. So we can see free cash flow easily covering those dividend payments with the exception of 2015. But since then, free cash flow again way outpacing the dividend payments. And finally, the last dividend king is W.W. Grainger, stock ticker GWW, and they operate in the industrial sector. They're currently trading at $949.92 per share, and the past year has been very good, up around 43.75%. Now, the starting yield for this company is sitting at 0.78%, and the payout ratios are nice and low as well. Again, pretty solid dividend growth, going from $3.59 to $7.30, which is a 5-year dividend CAGR of 5.5% and a 10-year of close to 6%. And we can see free cash flow easily covering those dividend payments. Again, one of the things I love to see is growing free cash flow, because that allows a company to continue to grow those dividend payments. And we can see the past 5 years have been very good, with a free cash flow CAGR of 14.16% and a 10-year of 8.3%. So the result of growing free cash flow and semi-growing dividend payments is a lowering free cash flow payout ratio, which is a good sign for the company. So there you go, that is a list of all 53 Dividend Kings in 2024. And like I mentioned earlier in the video, if you'd like to get a free spreadsheet just like this one that lists off all Dividend Kings in 2024, then you can sign up for my free newsletter at the link in the description. If you'd also like to get access to all my investment analysis and portfolio tracking spreadsheets, and also get access to the ticker data function that allows you to automatically pull in stock financials straight into your spreadsheet like you can see here, then you can head over to tickerdata.com at the link in the description. So with all that being said, thank you guys so much for watching the video, and please don't forget to like and subscribe to the channel.